Hi, thanks so much for watching this video. I'm going to be sharing some insights over the next 25 or so minutes that hopefully will be helpful for projecting what the next couple of days, weeks, and maybe even month or two will do. Saying all that to say, remember one very important lesson. When people are freaking out and they're terrified and they're scared, there generally is the opportunity to be more bullish than bearish. And when everyone's extremely excited and exuberant and thrilled, it's probably when you should be selling. I know it sounds easy, but buy when people are afraid and sell when they're really, really happy. Buy low, sell high. That strategy does work quite well. And I'm going to be reviewing the same list of stocks that we started off with in January. So we did January, February, and now we are in March. Let's dive into it. I'm going to review the broad markets first, which is the SPY and the NASDAQ. So the SPY is very, very interesting. As we get up here, one of the things that we got very, very close to is the 10 exponential moving average on the weekly chart, which is about 660 and some change. We've been resting here, and what this is called is a correction in time and not really price. For the last really since September, we have been trading in a range, also known as a distribution range. We had an incredible bull market here, poof, and now we are digesting that move. We are distributing, and we are getting some selling and some choppiness. And that's very, very expected. Here is the weekly chart on the SPY. Now, one of the things that I specialize in and teach people is the sentiment of candles and the sentiment of gaps. This candle right here is what's called a high wave indecision candle. It means I don't know what's about to happen. This candle closed below that candle saying, hey, we're probably going lower. And this morning, you had this bear candle that I'm pointing to with the pink arrow on the screen, and that bear candle gapped down. That is called a bear retest gap. And because we are retesting the broader markets, S&P 500 is down about 5%, nothing crazy. But anyone who was bearish, myself included, over the last 2 weeks, we're buying to cover today for a profit. This has been something that's happened almost every single Monday for the last 4 or 5 months. Is the weekend. There's a bunch of fear on Twitter. There's a bunch of posts scaring you and your friends about the market collapsing and everything going to zero and the dollar valuation going to zero and Trump and inflation and housing and the crisis and all the things. And we trade up on Monday. That is what's happening right now. So you'll notice some high wave indecision candles. Here is the bear candle gapping down. So that's the bear retest. The only way that short traders can get out of their positions is by buying to cover. And that's what's creating this buying candle right here. Now I'm going to turn on the long-term moving averages on the SPY, the 100 and 200 simple. You'll notice we have not actually gotten to the 200 simple yet. And I do believe that we will. From here, very, very likely chance that we're going to do something like this. And then there will be a little bit of a bottoming effect coming in probably late March, early April again. And that has happened, back over here during the tariffs. And there was another time also where this occurred. It's called COVID. And what was cool about COVID is we have the exact same president that we had during COVID. And that's when the market had this tremendous drop as well and then recovered early April. Are we going to get the same thing? I think so. I do plan on us getting down into the 200 simple moving average. So for those of you who are watching, there are tons of ways to take advantages of moves like this. And that is by learning how to trade options, learning how to trade inverse ETFs, learning how to spend an hour a day on your money. If you spend an hour a day on your relationships, an hour a day with your money, and 24 hours a day breathing, life will become really awesome for you. So that's my general thoughts on the S&P 500. The NASDAQ's not really a whole lot different. So here's the QQQ. The only small, tiny difference is we almost got to the 200 simple moving average. So again, if I were to draw a little level down here, so you buy down here, sell up here. We're going to have this range for a while, but I do think that we're actually going to go higher. There's a statistician, did I say that word correctly? And his name is Ryan Dietrich. I really like Ryan's work. He just does a lot of comparative analysis on markets and things like that. And here's my boy, Ryan. Feel free to follow him on Twitter. So we have a quick little selling event, which we've occurred. And this is over the past 20 years, which is really interesting. Markets have been a little weak during the February, March, April-ish timeframe, which is where we're at. And there's still a lot of fear out there. But again, as I mentioned at the very onset of this video, when there is fear, I'm getting pretty excited about figuring out where and when to buy. And we're in spots where, depending on your time frame, depending on your strategy, depending on your position, I'm really not that worried. And again, if we do get some drops, which is fine, there's some really good downside momentum to be had, but you don't want to get into bear positions when the market's down. You want to get into those bear positions when the market is up because it's cheaper and you can experience some soft rolling over effects. But ultimately, I do think this general market does go higher. If you have not subscribed to my buddy, dear friend, large investor, just incredible individual, Ascension Investing by Yates on Substack. I mean, it's free. I read every single article that he posts, and him and I chat on a weekly basis. And it's a, I'm not subscribed on this, Yates, chill out on another email. But as I'm looking at this, we do really good comparative analysis of like, hey, if this happens, then this happens, and we start really coming up with just great plans. And he's a phenomenal strategist. I highly recommend subscribing and just checking out and keeping an idea of what he's doing and what he's talking about, because him and I have very spot on and very similar thoughts extremely often times. So big picture, I think we have a little bit lower to go after we go a little bit higher. And then we can kind of have a little bit of a consolidation effect. And then I'll make an update if things get really crazy and tumultuous, but a little bit higher, then lower, then we consolidate a little bit longer, and then we go higher. That's my general thoughts on the market. So here is the 2026. This is Alibaba. Crazy. They've already reported earnings early, and Baba, just like JD.com, generally absolutely crushes earnings and totally smokes it. And they did well, but we have dropped and started going lower. The reason that my 200-something moving average is red is because red's like a stop sign. Like, hey, if we start breaking below this, do something. This was a really incredible location here on Alibaba, and we did break it. What's fascinating about that is if I pop over to the weekly chart, which by the way is free to change timeframes, that's a double top. And if I go to the monthly chart, that double top is being marked by the 100 simple on the monthly. So again, just from a perspective shift, I do think that Alibaba can have a retest effect. If we get back up into this 150, pretty good likelihood that we'll have a little bit of a push lower, which again kind of goes back to that thesis of a little bit higher and then a little bit lower. And then we start to bottom probably sometime in April, and the general markets go higher. Is the general markets Alibaba? No. This is going to move on its own, and it will be quite interesting, but that is a double top. And as of right now, I'm having a position on Alibaba. I exited that position on this little 3-week pullback into the 100, and this was a really nice push for about 16% on Baba as far as the returns are concerned. Looking for it to go a little bit lower. MicroStrategy. So this is a ETF that very closely tracks Bitcoin. And I know there's a whole bunch of people in MicroStrategy. I personally am also in this one with 800 shares. I am still underwater on those shares in particular. However, all my covered calls are up here. And the big level that's going to be a strong resistance on MicroStrategy is the 200 simple on the weekly. You'll actually notice we traded right into that perfectly, brilliantly, and beautifully, which allowed people to either A, sell calls, B, buy puts, or do something that could just prepare you, even if it's just a mindset shift, that, hey, we could have a little bit of selling. Once we can get above there, and obviously I'm going to look at Bitcoin next, but once/if we can get above there and start holding, I believe that there's a chance that the bottoming effect can come in. This big bear volume here with that really nice hammer there really was capitulation most likely on MicroStrategy. Now, how will this shift and can it shift? That's going to be all correlated 100% to Big Daddy Biddy. Bitcoin has held the 200 simple on the weekly chart. And I cannot emphasize enough how bearish we will be if we close below 59,000 on Bitcoin. That price does absolutely need to hold. And so far it has been. This is a gnarly shooting star candle. So if Bitcoin trades sideways this week and breaks below it, we're going to go right down to the 200. And if we close below that, it'll be rough for a while on Bitcoin. And that will be a full-fledged, bear market. This is the monthly chart. And if you're wondering, man, this had a lot of selling. Yep. 1, 2, 3, 4, 5 bear months in a row. And now we are in March. So I don't really expect March to be a turnaround, although it's possible, which is fine if it is. I'm still accumulating Bitcoin. I'm buying low here, but I have not aggressively purchased extremely large sums yet. I will plan on doing that, but probably somewhere below 60, most likely. I did get a chance to pick up some at 60 right there, got nice and lucky, which was cool. But big bull candle coming in today. And if Bitcoin, you pull up a Bitcoin chart and you see us below 66,000, especially this week, we will revisit 60 and then probably go a little bit lower. Is that going to happen? I don't know. I wish I did, but I can tell you this, overall, it's going to be a while before I can be extremely bullish on Bitcoin again. And the only way I can do that personally is we have to be above all the moving averages on all time frames. Very similar to how we were back over here. I can wait all of this time and do absolutely nothing. Wait. And then once we get back above all moving averages, I can be aggressively long at that point in time. I have no problem outweighting this market, and that's probably what's going to happen. Solana, which is a lot of people's favorite. Again, this one is also below the 200 on the weekly chart. And the big challenge I see with Solana is that is a key resistance level, which is like 103. So short-term range on this particular crypto, I'm gonna draw a box, and that's what it's going to be like, which is like a buy low, sell high, buy low. This is the box. That's it. I mean, if it gets down to this range, you can buy it. If it gets up into this range, you can sell it. This will be a very big resistance. And probably one of the higher likelihoods of a short would be if we trade back up into here and start failing to 100 on the daily, which would equally be the 200 on the weekly on Solana. That'd be tough. That'd be very tough to break above. And that'd be a spot where I'd actually look to probably play some bear moves. So in general, the great news about being a trader, learning how to be an active trader, is you can pivot, you can change directions, you can be bullish one day, you can be bearish the next, you can take advantage of all the opportunities and all the movements that are right in front of us. Oscar, ladies and gentlemen, I know this is a stock I've been discussing and chatting about for a while. We had two incredible buy signals recently. The hammer of Thor coming in here, like 9.9 out of 10 at the 200 simple moving average on a weekly chart is an incredible buy signal. Again, with everyone talking about AI, taking over the world, this is an AI healthcare company that has done an incredibly great job of increasing revenue. The daily chart, one of the most brilliant hammers I've ever seen in my life, occurred on February 24th. So this was a really easy buying opportunity for some quick profits. And right now we are creating and forming a double bottom. So I can tell you present day, if we hold and keep this hammer in play, we should trade back up into 16. And at 16, do something with the 100 and 200 there, get into a collar or sell some shares, be smart. But if we take out this hammer, especially this week, we will revisit 1150. And you can do with that information what you want. Do nothing, buy puts, sell calls, protect yourself, all the things. Apple. I mean, who doesn't love Apple? You got some selling on Apple. I agree with a lot of analysts that this does look a lot like a double top to me. It really does. In order for that to happen, though, we need to close below 255, which may or may not occur today or this week. In fact, I don't necessarily think it will. But what I can say on Apple is I am by no means a bear on Apple. I like the congestion that it's having. We had this nice lower high coming in right here. So my general thoughts are if Apple can get back to 245, what a great spot to pick some Apple shares up. Weekly chart looks good. You got a nice, very nice shooting star candle here on the 23rd of February, which again, knowing how to switch time frames, knowing how to read candlesticks, this gives you the ability to play some bear positions over the last 2 or 3 weeks to at least protect yourself or decrease your overall fear of, Apple going belly up, which it won't, and just protecting yourself and making some cash flow on the downside. Strong buy for me is 245. I'm okay to wait until we get down there. And I do think that there's a good chance that we can. Something like this, and then kind of bounce around. The 200 level moving average on Apple and pretty much anything else does need to hold in order for us to be bullish. Netflix had a really, really incredible move. Congrats to all those people who were buying this little dip and just kind of averaging in and being smart. Nice little double bottom. Absolute ripped your face off kind of a move after the Warner Brothers deal got canceled or fell through or whatever. So at this stage, I'm looking for something like this on Netflix. This gap very, very likely will fill or be retested at some stage. And the good news is that's the 100 simple on the weekly chart. Really, really amazing move. This is when nobody wanted to buy Netflix. Now this is when everyone wants to buy Netflix. It's not really the way it should work, by the way. You want to buy assets as they go down and sell them when they go higher. So as of now, I'm looking for something like this. A little bit of a pullback on Netflix and then a buying opportunity. I think Netflix is a company that will benefit nicely from AI. And that's because their biggest expense is paying actors. So 5 years from now, when AI gets really good to make full videos and full movies and have acting and have all the things, they will save a bunch of money and no one's going to really cancel their subscription. They're going to keep making their monthly recurring revenue, which they've been doing a very good job of. And so buy low, sell high on Netflix. Johnson Johnson had an absolutely really powerful, just rip your face off move. Again, a company that has zero debt that I do not think is being impacted at all negatively by the war. I understand that we should and could get a little bit of a pullback. So again, if the market goes higher before we go lower, we could see something like this on J&J. But ultimately, this trend, if you're looking for one that's bullish, this is a bullish trend. It's strong, it's powerful. Buy dips. Obviously, we'd like to buy them as low as possible, but buy dips on Johnson Johnson. In my personal opinion, the chart looks really, really nice. Yes, I'd like to get it lower than it is here, but ultimately, it looks really good. So Johnson Johnson, well done. Costco, another one, just had earnings. They crushed it. Talking about another very, very strong gap analysis, right? Again, bear candle. We gapped down into a support. Those bears were profitable. They bought to cover, and that's what caused that buying to come in. Again, is Costco negatively being impacted by the war and all the things that are going on and oil prices? Short answer, no. Costco is still in a bullish trend. It looks good. Buy dips, bounced right off the 50 EMA. This was an awesome open for put sales or bull put spreads or anything essentially kind of bullish on Costco. And there's some companies, again, that will be negatively impacted, and there's some that will not be. And I think that this is one of them. Chevron, ticker symbol CVX. It's hard to not be bullish oil right now. I mean, again, with the macroeconomics, we have made a new all-time high. So this probably isn't the best time to buy Chevron. If you are buying, don't buy aggressively at the highest price in human history on the stock ever. That's not really what you want to buy. You want to buy some kind of pullbacks. You want to buy some kind of dips like we got last week. And again, doesn't mean you can't buy something here. But if it were me, I'd look for a little bit more of a selling event because up in this area, we will get sector rotation at some point. I think it's weeks away. Sector rotation is when everyone starts selling the obvious positions, the utilities, the energies, maybe the Johnson Johnson of the world, the companies that have already been higher, and they're going to rotate, take profits from those companies that have been strong and pour them into some of the weaker companies that are on the lower price. That's what sector rotation is. And I think Chevron could be one of those opportunities. I don't have any position in this one anymore. Had a nice little push into here once it took out all that bear volume. It got above that hammer. So for me, if I'm buying, I would like to buy some type of pullback on Chevron. Trend is bullish. Just can't buy a whole bunch of it right here. First Solar. So First Solar is a position that I have some puts on right now, and I'm going to kind of keep playing that trend presently because we took out all of this bull volume here. We closed below it. We had a shooting star retesting it. And so I think sell rips on First Solar, at least for now. We did get below the 200. That was a gap and go. That gap and go continued. And right now we're below the 100 on the weekly. Looks like this is a retest. We probably visit the 200 at some stage. I'm not aggressively attached to First Solar in any directional position at all. If it goes down, that's great. Sell high, buy low. And then once it starts getting its way down to 180, I think you can pull the ripcord and move on. And that's that on First Solar. Enphase, last time we analyzed it, we had a good little trade on it together through this little push here, this little retest, that little move. That was nice. If you got a chance to catch that, congratulations. And really all we're doing is filling this retest gap, bull candle that gapped up. All the buyers are profitable, so those buyers sold. Again, looking at a volume profile, really, really easy to see. Once we closed below all that bull volume, all those bulls are trapped. Trapped bulls sell. That's what caused Enphase to go lower. And now we're trading into the 100, 200 on the daily chart, which is acting as a little bit of a support for sure. And the weekly chart, we're still pretty far below the weekly and the monthly 100. So you're bottom fishing a little bit on Enphase, but risk reward's pretty good and ultimately looks nice. Robinhood, I understand. I get it. It's down. It's going to take a while to consolidate, but this one will eventually go higher. It's going to take longer than you want it to, and you're going to have to be more patient than you want to be patient on it. But the 100 on the weekly is holding nicely. We did have a double top. We did get an aggressive amount of selling. This is a bear retest gap on the weekly chart right here, which will be filled eventually. And down here, I am accumulating Robinhood with profits, with income, with whatever else I can. In fact, today at open, I sold some $69 puts for mid-April because I really don't mind owning more Robinhood. We got a glimpse just last week of how quick this thing can move right there when that stock was up 10% in a day. It was obviously 3 bull candles in a row with a retest gap. So that was a day to sell some calls and buy some puts, all of which have already kind of paid out for you if you're an active trader. And if you're not, I mean, reach out to me. Let me know if you want to be, because I think it's absolutely without question worth your time. So yes, Robinhood, buy low, sell high, accumulate, be slow, be patient. It's going to take a while, but if you can own some shares down here, you will get paid out eventually. Reddit, I bought 50 more shares today at 135. We have 3 down candles in a row. My buddy and client, Sean Kelly, sold some 125 puts, which paid him pretty handsomely. The 100 SMA on Reddit did get born recently at 140 pounds and 53 ounces. That's what it is right now. And we have 3 down weeks in a row. So 3 down weeks in a row, 3 down days in a row, near a good support. This is also was/is a large double top. And I think worst case, we should or could retest 180. So as Reddit's down here, again, I'm being patient. Is this one negatively being impacted by AI? No. In fact, AI would use it more. Is this negatively being impacted by the war? No. Are revenues continuing to increase? Yes. Are they crushing earnings? Yes. Buy low, sell high, be patient. Now, Google is really interesting. I know there's a lot of people in Google, tons of them. In fact, this is probably going to be a good day to get some protection just in case. Head and shoulders pattern. Long term, I'm a shareholder of Google. I want Google to go higher. Big fan. Got a lot of it, but I think it's at least worth protecting here just in case. Especially anywhere up into here, 304, 305. If I mention the markets go higher before we go lower, I think this could be a slight tech company that just gets some selling because it's so obvious, it's so high. It's at least worth picking up something as a protection. No offense, but I do love some long-term Google. Micron, is it actually going to create a double top or not? I do not know, but the great news is we're here. We're right at the neckline. If you like trading double tops, this is the one to watch. So we start getting some failure, some rejection. I don't expect the selling to last long, by the way, not only on Micron, but pretty much whatever we get. I don't expect the selling to be long lasted. 2 or 3 days kind of thing. Quick sell off, everyone panics, and then fully recovers. XLE, same thing as Chevron. I did mention in January that this would make new all-time highs this year and break out. We have. So buy a nice dip on this one. You don't want to be buying super aggressive all the way up here at all-time highs. That doesn't mean you can't buy. Just, don't buy all of it. This little pennant pattern, if it has a pop, I don't think it would last very long, and then we would trade back down and then, higher, then lower, then higher. That's kind of generally my thought process on most things. 2 minutes to go. Looked at Solana, looked at Bitcoin. Webull, get some protection on it. They had actually pretty good earnings. Their fundamentals look not terrible, although the CEO is still doing a horrific job at managing this company. They look okay. I mean, they have 2.1 in cash, 77 million in debt. Their market cap is almost as much as they have in cash, which is a strong signal for a little bit of a recovery. So what I'm looking for is a retest of this level higher and then a little bit lower, selling some calls, getting into a bear put spread or some downside protection just in case. It keeps making lower lows and lower highs. The trend is bearish. That's a lot of bear volume. Short, the rip, probably the best case on Webull. ZETA, believe it or not, actually looks strong. It's recovering the 100 and 200. We had a really, really big sell-off in January, February. We got to get above the 100 on the weekly and the 100 on the daily. And once we do that, buy the dip. ASTS bounced perfectly for the third time off of the 100 simple moving average. So if you got a chance to catch that, great job. Rocket Lab, same thing. It's here at the 100, buy low, sell high. Uni Software, do people make video games anymore? Short answer is, I think they do. This is a double bottom on Unity. It got most of it selling from the whole AI fear. And now we're down here. Buy low, buy slow, be patient. I do think this one recovers. Their earnings are still quite tidy. They've had some slight pausing here, but in general, it's pretty good. This one, again, kind of bottom fishing, not being aggressive on it by any means, just buy low, sell high and see what happens. Wolf has been very profitable for a lot of people. Same thing, buy low, sell high. It's at the 100. It looks good. UMAC, essentially a drone war company. It just came out with earnings. If you get this, again, that is a gift. Double bottom there off the 100 back in December. Here's another double bottom that's forming again. Presently, UMAC is holding up well. Trend still bullish. You're above the 100 on the weekly. Buy low, sell high. ONDS, same thing. Hold the 100. If it breaks it, be a little bit more on the bearish side, or at least protect yourself. But the 100 has been an amazing support. So buy off of that until it doesn't work. Lemonade, again, trying to double bottom down here. There's a few of these tech companies that are. Snow, trying to double bottom. And App has squeezed all of those bears from earnings after it closed above it on February, retested it, and then continued higher. The shorter answer is, team, there are bull trading opportunities out there. Yes, there is fear, but I think that this is a headline that goes away just like all the other ones at some particular point in time. I have an incredible podcast coming up today, actually, with my podcast, Solving America's Problems, where I discuss the future of AI, the future of the U.S. job economy, what we can pivot into, how we can pivot, how we can be stronger, better. Opportunity never goes away. It only changes places. And there's going to be a lot of opportunity for every single person out there if you're studying and, most importantly, thinking. Because if you think, you grow rich. The title of the book is not Work Harder to Make More Money. Let's continue to use this. Let's continue to have our powerful network, powerful people, get aligned, be sharp, and attack it. Hey, if you have any questions, let me know. I happen to be really, really good at this. I'm a highly sought after stock coach, trading analyst, and someone that can help anyone accelerate their income massively, because it's about the mindset, it's about the heart set, it's about intention, awareness, clarity. Thanks so much for watching. You rock.